Hello everyone, welcome to tonight's video. Today is Wednesday, October 2nd, 2013. Let's go right into the SPY. If you guys recall my last video, I called out this level as a for sure you could day trade this 618 Fibonacci level breakout area. Sure enough, when we get there, we get a nice bounce at the moment. You guys see this is 618 Fibonacci. If you guys know how to do Fibonacci retracement, it's very important, but you always got to line up with other factors. Here, this was the 618, 167 even number breakout area. I played this for a scalp last week, and that was beautiful. Monday, sorry, and that was a beautiful play. Played as a day trade, didn't keep it as a swing, but definitely, as I said in the video, that was a very great spot. Okay, to go long as the day trade. Let's go intraday. Let's go over some of these intraday charts as I've been doing pretty well scalping so far this week. Even though it's been going up, actually they're to the short side. So I wasn't chasing anything long. As always, as long as you fine tune your entries, you do very well just scalping. So let me get right into that. Let's see if I can close some of this windows here really quick. And let's get right into it. 10-minute chart here. And zoom this in. Let me do another refreshment here on the page. And we'll get right into it. Pretty simple. When the volume is so light during the afternoon lunch hour session, usually you think the market will float up on lighter volume. So when I do scalp on the short side, I do actually look for very small, minimal pullback. And that was the right call actually. So let's go back on Monday and today really fast, really quickly, since I do like to go over the SPY mostly. So let's get right into that. Extend this chart over. The last 2 days we did have a nice surging green bar, and that's a very interesting action to keep note of. As let's see if I can pull this. There we go, finally. So here's the last 2 days action. As I recall, let's see. I don't remember far back from Monday, so I'll just go over today. Tuesday's action. This morning we got a nice retest of this trend line over here, and it looks like we could be a head and shoulder here. But we haven't broke. As long as we don't break out of this high, this could be. If you look at this neckline, it could be a head and shoulder, and that could be a possibility. But let's go right into the first opening candle of the day. We had a nice gap down and gap and go, a gap and crap as you like to call it. But then we retraced, and this is where I went short. The first entry was the first hit of the 20-day moving average, okay, or the 20 moving average on a 10-minute chart. This was also where we made a high at the first candle of the day. That can also be known as gap window. That's two factors pierce of the 20 moving average. My blue line. See how you saw the downtrend in the opening hours of the day, opening few candles of the day. Sorry, we made a nice pierce of the 20. And once I played that, and I knew the gap was coming up soon, so the previous yesterday's lows, so previous resistance now, previous support now resistance. So that's when I took a shot because all these factors put together, pierced the 20 into the previous lows from yesterday. Now should be resistance. That's when I took it. See, now if you're the average trader just taking the 20, see, you'd be at break even the whole time. See, so that's why you always play the pierce, especially on a strong uptrend. And that was the right call because we just pretty much floated up for the rest of the day. So I took that pretty much half a point to a point, I believe, on the E-mini futures, and that was a beautiful gain. Look, and guess what? We didn't get much more drop after that. We made a nice bullish flag and continued. And I took the next level, which is pretty simple, which is the next major moving average. But this time you got two moving averages. Okay, so now you have dual moving averages, and they're sloping downward in a downward fashion. You have the 200, which is the red line, and the green line, which is the 50. Okay, now if you line it up with another time frame, I like the hour. Line up with a 60-minute chart. So, and that's another beautiful way of lining up trades when you line it up with multiple time frames, guys. I go over this all the time, right? I always harp on the fact you have to go through multiple factors. And when you're trading intraday, it's the same thing. Okay, same thing. These doji candles, that could have been your signal to go long, but I never like to chase. I always like to. So if you saw this in the first hour of the day, you saw a nice candle, but you always have to wait for a retracement, perhaps to see where this previous pivot low was on this 60-minute chart. Maybe retrace back into there. It's also 50% retracement of this hammer candle. That would be your nice long opportunity. But generally, the rule of thumb is you don't chase anything long or chase anything short. So for me, I was looking for short side scalps. Okay, scalps on a short side. On the 60-minute chart, pretty difficult to pull back this chart at the moment. So I don't think. Okay, yeah, it was pretty much. See where this purple line, yellow, that's your 150 and 10 moving average. So those dual moving averages there. I knew it was approaching towards this trend line and gap fill. So, but I knew it was during the afternoon time, you can't expect too much of a pullback. So once I had a point gain on the E-mini, I took my profit. So right here, and a doji candle set up as well. So it was a time count doji. So on the first candle, I took the profits right there. And that was right again. That was the right decision. Two moving averages. I believe this was let's see what kind of Fibonacci. I think it was a 6-1. Actually, it was a 618 if I remember. I can remember. I can remember today. I can remember as far back as yesterday on my day trade. So, but I believe this was a 618 Fibonacci retracement. See if I can pull the fib down. It's taking forever. But anyways, this was a 61. Just take my word for it. It's a 618 Fibonacci right here, and it's also pretty much a gap fill candle, lower gap fill candle. So that was multiple factors there, and took a nice little chunk of change in the market right there. And the ultimate level, which I was pretty disappointed I did not get filled. This was a 75% retracement. I think here's the fib right now, but anyways, this was a 75% retracement. Got the upper trend line and upper gap fill, and this was a spot right here that goes short. I missed it by a quarter point on the E-minis. It was pretty disappointing, and that's when we got the nice fade. This was the biggest, the pullback we got the whole day, and I missed it by a few pennies. But that's not the way it is. The average trader will try to chase it short, but I didn't do that. So, but it didn't get to my entry, so just let it be, and there will be other trades. Okay, on the 60-minute chart, that was also the first hit of the pierce of the 50 moving average on the 60-minute chart. See right here, guys. See the first hit. See how we've been hammering on the 20 right here multiple times. When you finally break through the first hit of the 50, it's going to be resistance. And sure enough, that was my catalyst. I wanted to get a little bit closer to the gap fill, official gap fill, and I was going to get filled, but it did not quite get there. And sure enough, got the nice drop. I'm sorry, it's over here actually. The gap fill's right here. 50 moving average right here. It was actually the second hit actually. But yeah, trend line as well, and we recaptured this channel. So that's what my mentality was, my thought process. But we did miss the official gap fill, which I put actually a little bit lower as my sell entry, and still not get triggered. Okay, so but we are retesting that area now. The futures right now are pretty much at the lows right here, and I scalped it right before I did this video. I scalped it right here. So if you guys watch intraday after hours, I actually scalped this right here. It was a beautiful play on the E-mini and got a nice bounce before I did this video. So there's plays to be had. You just have to be patient and watch for the setups. Don't force anything, especially when you're day trading. You have to really fine tune your entries. Okay, guys, that's a little bit longer than I usually want to go on the day trading side, but hope you guys got something out of that. So as I go back to the daily chart, guys, on the daily chart, we are just stuck in between these two moving averages. Not much to do. There's no real risk reward trade here. The trade was pretty much here at the 618 Fibonacci. If you had that, you can take profit here and with a break-even stop and see what kind of move you get. But right now, there's not much to do here. There's no pattern, nothing to do here. But you are stuck between the 20 and the 50-day moving average right here. So okay. And so what I did this week is I actually sold bull put spreads below 163 all the way down to 156. Okay, early Monday for premium. So that was what I did on SPY. Okay, so well below the 200, and then actually, as I was correct, as we bounced here, I sold some right around this pivot. Okay, which I think this trend line was your definitely your stop out level. Okay, so as long as that holds, I think it should be pretty decent. Let me actually close some of these windows. So it's pretty laggy here. Let me force quit some of these windows here that I have open, so I can get to this video more quickly. It's actually lagging pretty bad at the moment. So give me 1 second, guys, as I close these windows. All right, there you go. So that's what I'm seeing on the SPY right now on the daily chart. Upside, not much up. On the upside, there's not much resistance, and the only resistance I'm really seeing, perhaps, could be these. This 10-day moving average, which will be minor. The 20 is also going to be minor. You do have this previous 52-week high that we failed to break out. If we broke out of it with a nice green candle, but we failed to make a nice pattern and stay above it, we actually crashed right below. So that's gonna be, that's gonna be resistance, as this was resistance over here and failed as support on the way down. Okay, so that's what I'm seeing on SPY. Watch this trend line, guys, very important, and this upper trend line. Okay, I've been calling those out for weeks. Let's look at IWM. IWM is acting very nicely. It's actually consolidating beautifully in this upper range. We did close new highs, I believe, Monday, and we're making a nice inside candle. So IWM acting very nicely. I believe the Qs as well. Nice consolidation, holding above this the 50. You're starting to space apart in the moving averages. So see if this uptrend can continue here. Apple very fast. Um, Apple's still in this bigger consolidation pattern. Been calling out same thing, and this upper trend line still looks like it is valid. So let's look an eye at see if Apple can still break out of this. But I think it needs more consolidation. But let's see if Apple can break out of the upper trend line. I know I'm going kind of quick, guys, but uh, I just really wanted to go over some SPY intraday stuff, and that's pretty much mainly what I wanted to go over. Yeah, see it now. Look at Amazon. I remember when it hit this level, I was thinking it might need to pull back, but then when I saw it continue to make a sideways consolidation pattern here, I thought that it really had a good chance to break out to new highs, and sure enough, it is holding up very, very well, and we did get a nice green bar as we have seen on the previous charts. But yep, Amazon holding up very, very beautifully right now. Not much, can't go short there on Amazon right now or long, because if you were to go long, you have to wait for the pattern to retest its lows, and they can play this consolidation pattern. But right now you're at the upper range of it, so you're right at resistance, and your support's here. So ideally, if you want to play this pattern, you want to where your stop out will be close. You want to play it pretty much right here. Maybe stop out below the 20-day moving average that's rising, but right now it's an upper range. If you wanted to wait for a nice, maybe you can make another bullish flag inside another bullish pattern. That's your setup you want to wait for. Right now, you can't be chasing it up here. Let's look at Tesla. Tesla, I've been actually going over for a while. I haven't really touched it until I wanted to see the 200 even number get tested, and we almost got there. We got that news on the Tesla fire on one of the automobiles. So that's why we got a decent drop today. Actually, it's a pretty great drop. And I played it, of course, right here on the 20 moving average on the daily chart. Sold some bull put spreads. Actually, I sold some naked puts actually below. The premium was just so delicious. I could not ignore it. My stop, I mean, this is a very simple chart, guys. This is your previous breakout here, Tesla, right? And then you have the 20 moving average. I mean, it's minor, but definitely you could play that as a scalp trade, and that was the right play if you scalp that beautifully. But I sold puts below 142. Actually sold to 142. So my stop out for me will be the 50 moving average, which is at right around 158, I believe. So 158, that's your 50-day moving average on Tesla. That's your swing trade actually opportunity right there if it gets straight down there. And I sold puts. These are weeklies, guys. Whenever I sell puts, they're always weekly, so they will expire in 2 days, worthless in my favor, and I'll collect that premium. So the 142 is my level that I need for it to hold this week, and that should be some free money on Tesla. Actually, if you look at a 10-minute chart, it did make a nice bullish engulfing candle, and that should keep this today's low in check. Okay, guys. Let's go over some Facebook, and I think I'll call it for the day. The video has been going on longer than I anticipated. As you guys know, I've been selling the weekly calls on Facebook just because of the $50 even number. And think about the move that they already had, over 100% move already, and the recent upgrade. That for me, average investors will jump on board and go long, but as a contrarian view, as I like to play at times, and knowing that charts hitting the $50 level early last week, I knew it needed to consolidate here, and I sold the $55 call last week, and that was free money right there. As I kind of joked and laughed about it, sure enough, it didn't even get near there. And same thing this week. I actually went a little bit higher this time, just in case this pattern did play out. If it does play out prematurely, the measure move does take it to $57. So I went ahead and sold some $57 calls on the upside. These are weekly, so they will expire. They're already worthless pretty much. They were like a penny. I already covered most of it. But $57 is your measure move if you measure out this pattern, and so that's more free money there on the option selling side. Okay, guys, I think that's everything I wanted to go over. So let me see if I can go over GLD really fast before I take off on this beautiful fine evening. It does look like we might have a head and shoulder pattern here, guys, and you did make a nice bearish move into a death cross here, pretty much almost into a death cross there, and so this could be a head and shoulder pattern. So just watch it. It did close below the neckline. Okay. See if I can draw this in. I don't think the chart's letting me draw this in right now, so I pretty much cannot do it. But if you connect this pivot low and this pivot low to this igniting bar, we did close below it, so that's negation of this bar. That's a negative there. And if you draw this neckline across, you are trading below that neckline. Okay, so if that triggers, that continues to the downside, as long as it doesn't close back above, your downside will watch out. Okay, on GLT. I'll probably go over that in my next chart when my video is not freezing up on me. Next time, I actually make sure I restart my computer before I actually do these videos. That's probably might be a good idea. But the SLV is pretty much confirming that move. We had a nice igniting bullish bar, closing below it. See how it's resistance intraday as we close below this green bar, big green bar. So let's see if it can hold this. Right now, it's below this gap window. So the gap fill did not officially get hit, but it is pretty much a bearish case now because you're below two moving averages. Your 200 moving average is declining. So be careful on these precious metal stocks at the moment. Okay, guys, I'm going to call it for a day. I'm going to enjoy the evening here. Beautiful week so far. Just spectacular. Can't thank God enough. Okay, guys. So I hope you guys are doing well. Just pay attention to these charts, guys. If anything, if you're not, I don't know if most of you guys are swing traders or day traders, but definitely these levels I do give out. You should be paying attention. At last few videos, I have been calling out these levels on SPY as day trades, and they worked out just beautifully. Okay, guys, so watch out. This is a very important spot. If this breaks this current low, your next spot is this trend line, which is going to be major. Okay, if that's a breakdown, watch out below. It's going to be minor support. I'm pretty much going to be very cautious, very defensive if this trend line breaks the next day or two. But that's why I went ahead and sold 163s. 160. Puts below here. I think for the week we're fine. And sure enough, it seems like that was the right call, as this week has been very, very stress-free, and that's always a good thing. Okay, guys, I'm gonna check you guys later, and I will talk to you guys next time. Have a great one.